good afternoon, good evening, traders. It is Sunday, February 27th, and we are going to prepare for this week's market. We're going to do a little breakdown of the big events that are happening this week. We're going to talk updates on Ukraine, Russia, talk some of the levels, the headlines, the economics, the earnings this week, the top stocks in play, Lions, Tigers, and Bears. Oh my. I'm going to try to wrap this up with a neat little bow. Keep it short as possible, entertaining, hopefully, and a little informative. So we're going to take a look first off at the market as we traditionally do, and we're going to start with the SPY. And so we just had ourselves a nice little rally here from peak to trough. It's been about just over 6.5%, we'll say. Really insane 2-day rally, and people are, if anyone hasn't been paying attention, they may be confused as to why we're rallying. And let's just, cover a couple things that people need to remember. First of all, you turn on any news source last week, anything, whether it's market related, world related, whatever, it is doom and gloom, markets dying, war, inflation, chaos, short, 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 short. And we have had I'm talking literal record amounts of notional put volume put on out there on equities. I mean, everyone, your mother, your dog, your neighbor, your best friend, your wealth advisor, they're all looking for the market crash. And so you got to be careful first and foremost. I'm not saying that that alone is what makes us go up, but as traders, it always helps to be a little contrarian in there, especially when the skew gets so shifted. So you had insane amounts of puts and downside being put on. You had this massive gap being put in on Thursday, and then when you had this massive gap being put on, well, first of all, we did gap down to a pretty decent little support level here on the SPY, even better level here on the Qs. And so when you got there, you had this massive gap down. You had a lot of people say, all right, well, I'm not going to be the bag holder here. We just got a nice little flush down. Some people who traded, say, like Apple, made like 20% in like a week on the downside. And a lot of them were like, I'm not going to be the bag holder. I'm going to cover. I'm going to short. I'm going to cover out. And you got a nice little short squeeze going, a nice little rally where people were covering into this. You had some, a lot of puts being taken off, dealers, who were hedging, taking their shares off, and so on. So you had a lot of stuff going on there, where that was just straight short covering to an extent. Also, we are an extremely headline-driven market right now. We are talking, especially in the short side with short term rather, with the headlines going on. This is an extreme moment for the market in terms of headlines with Ukraine, Russia, and we've had a lot of headlines over the weekend. So right now we're still seeing that escalation. Putin, doing his usual rhetoric and doing his insanity in terms of referencing nuclear weapons. You did have the Ukraine president agree to meet with Russian leadership in terms of talks in a neutral location. So we'll see if anything does come of that. It hasn't in the past. But this has been an embarrassing invasion for Russia, frankly. I mean, from everything that I've seen and read, this is just going about as poorly as it could have possibly have gone for Russia. And the question is going to be, is Putin of sound mind and going to be reasonable and rational about this? We're going to see, because this has been, from what I can tell, I have no idea what his end game could possibly be now, because it's just completely gone wrong. You have the EU and US agreeing to start cutting off select banks of Russia from SWIFT. That's going to be beginning today. So they're going to be sanctioning the Russian central bank. They've been just plowing sanctions onto Russia elites, seizing yachts, assets, and so on. And so we're going to see what the response is as they've been upping their attack and their invasion. So that is still a very fluid thing out there. We definitely need to be keeping a very close eye on that, because that is something that is affecting not only the European markets, but it's affecting us as well. And it could affect a lot here, because we had Fed governors last week come out and say that this could change the rate hike schedule. And we're just ending February. We're going into March. We've got just under 3 weeks, like 2.5 weeks until the Fed meets again. And the market is expecting a 50 basis point hike on interest rates. That could be delayed, and the market could see some euphoria off that. So just be careful. I'm not saying we're going back to highs, but it's a whippy, choppy time that is incredibly headline driven. I do think we could roll back over, but we also have another event going on in that we're at the end of the month, and there is rebalancing. You typically get those equity inflows at the end of the month, mutual funds rebalancing, dealers hedging and rebalancing. So this is what happened at the end of February or January here. Look at this nice little 4-day rally, and what we did off that was a nice little, just over 7% rally while we were sitting at the lows here. So That's just to put some things into perspective here as well, is at the end of the month, we tend to get these little spikes like this. You can see it here in November, largely in December. It's not every time, keep that in mind, but that is a big part of it as well. So you've got a lot of things going on that's kind of keeping some stuff to the upside and helping with that. But things are not all completely rosy out there. We still have record high inflation. PCE deflator index was on Friday. That was higher than expected, the highest we've seen in 40 years. It is also the Fed's favorite inflation measurement index. We've seen the lowest amount of saving rates out there since 2016. So economics definitely a little shaky, but we're going to get some big numbers this week. And before I talk levels, let's talk about some of the numbers we are seeing and some of the economic headlines that are going to be coming out this week, because there's going to be some events. Monday is going to be relatively quiet. We'll have Chicago PMI at 9:45 and international trades and goods and services. Tuesday, you've got PMI manufacturing, ISM manufacturing, and construction spending. So we'll actually get a little bit of industrial numbers there. Wednesday is going to be that ADP report, because don't forget, this is the first Friday of the week. And so, of the month, and so we're going to get the employment numbers on Friday. That's going to be the last jobs print we get prior to the Fed meeting, so that's going to be an important one to watch. And then also, we have Wednesday and Thursday, the Fed chair, Daddy Powell, is going to be doing his semi-annual monetary policy testimony in front of Congress, Wednesday and Thursday morning. So that's going to be very important. We all need to be paying attention to that, especially going into this Fed meeting. So going to be some interesting events. It's going to be we're definitely going to need to keep an eye on that, because without the war, without the stuff in Russia, we'd most certainly be heading into a rate hike. But at the same time, the market is pricing in Fed policy error with the rate hikes. The current yield curve can withstand about 2 rate hikes before we invert and start pushing our way into a recession, because we're seeing this economic slowdown, and he wants to raise rates into an economic slowdown, which will make things worse. But you still have record inflation, and now we're going to have oil prices continuing to rise as a result of Russia-Ukraine. So there's a lot going on. It's a lot of headlines, a lot of craziness, and so the best thing you can do right now is know your levels and protect your risk. Protect your assets, protect your positions, know your levels, prepare ahead of time, and you'll be okay, because that no one, not me, not you, not the traders on Twitter, or the pick services. No one knows where the market's going to go. What we need to do is we need to set our levels, adjust our plan, and see how the market reacts to those levels and go accordingly. So that's kind of the the long spiel there of where we are. SPY had that nice little rally. We're going to have the 200-day and these moving averages kind of stacked right up here. I think this is definitely going to be a bit of resistance for the SPY. I can't see it going much higher than this. If it does make it to that 445, I don't even know if we make it that far, frankly. We're going to have to see where we open up on Monday. Qs, meanwhile, obviously have been a lot weaker. There's no way we're getting up to that 200-day, but you do have some levels here. This is going to be a pretty important inflection point, this 353. I think this is going to definitely be a level to watch if we can even make it up there, frankly. If we do start rolling over, I wouldn't be surprised to see that weakness. The Qs almost officially erased all of the move from 2021. This is where we opened here. We got about 2 or 3 points off of the 2021 open. So we have fully erased most of that last year's move. So keep that in perspective as well in terms of where we are and how far we've gone. IWM, meanwhile, kind of in this just open air, this consolidation in open air here. Remove some of these levels in here. I apologize. This is an important double bottom. Obviously, we want to make sure that we defend this. If we start rolling through here, you've got, I think we're most likely going back to these pre-COVID levels here on that. So I still expect a lot of volatility in this market. I still expect a lot of chop. And speaking of volatility, Mike made a very astute observation. I think if you were paying attention to us and to some of the things that we watch, like the VIX, very interesting observation. The SPY on Thursday had that nasty drop, that nasty gap down. We saw a lot of craziness out there. VIX couldn't really get over those January highs, and VXN couldn't even get close. The VXN couldn't even get close on volatility. Meanwhile, you had Qs blowing out levels down here. IWM got close to blowing out levels. RVX, did okay. And so we're not seeing the same equivalent spike in volatility. And until we see that as well, we'll have to see where we are. Now, we are making these higher lows in the VIX. Definitely something we want to be monitoring as we go into this week of trading, is where the VIX is relative, and the VXN and the RVX and all the usual volatility measurements there. And the volatility of the volatility index is weakening as well. So So you're seeing a lot of decrease in volatility amid all of this. And as these headlines continue to roil, as this stuff continues to come out, the market is going to get better and better at pricing in the future expectations. Keep that in mind as well, that the market is a forward pricing mechanism, and the more time we have for headlines, the more that this stuff works out, the more clearer this picture is going to get to the market in terms of what to expect and what to price in, and it'll slowly start to work around these headlines better, and you'll see more of a clearer picture coming out. So if you're getting chopped up, you're feeling that frustration in the market, don't worry, it's not you're not weird. You're definitely not the only one out there, I'm sure. We are definitely shorter term nature in traders right now, especially anyway. So it's just you got to be careful. You can't be shorting at lows. You can't be buying at highs. You got to be very proactive and anticipatory, and definitely work off levels. So that's the market. That's my spiel on the market. Let's take a look at commodities real quick. So oil and gas, obviously, still chopping around up here. We did pierce over 100. Now we're just getting this flag sideways. If you listen to Tyler talk during our podcast in terms of our his commodity analysis, it's interesting because he definitely feels that we get technical. Technically it looks like we want to move lower, but you obviously have the headlines out there that could jar us. I'd love a pullback in oil. I'm still bullish oil and energy overall, but we'll see what we get going into this week, because obviously it's kind of doing a little bit of a stalling here. Same with gold. Gold had a nice little spike. Thursday was just a wild day for all of those assets and commodities overall. Feels like gold's getting a bit of a pullback. And then the dollar continuing to flag around at highs as well. Had a nice little strengthening action against the ruble last week and several other currencies. So that's a lot of that. And then obviously our friend crypto. Well, crypto, it's down here. It is holding technically. I'm not the most excited to want to buy crypto, because again, it's still kind of trading with the market, so it's not that exciting to me right now, but it could be worth a watch soon enough. It's just not really the hedge that people think it is in terms of inflation and risk and so on, so just keep an eye on that as well. That's the market, that's commodities. Let's talk some of the stocks and earnings. So there are going to be two stocks that I'm going to be watching this week, mainly due to headlines, and nothing will likely come out of these, but it could be interesting. Meta, first and foremost. Meta's been getting the absolute hell kicked out of it, getting a nice little engulfing pattern here, so we are starting to get that bottom. It may be time to I might do a little flyer against 200, but they did get a bad headline that Meta completely canceled its team of 300 plus people. They were trying to create their own OS operating software for their metaverse and their goggles and their headsets. They wanted to be able to own their own OS, but it looks like they're canceling those plans. So definitely a big blow, in my opinion, to that, because now they're going to continue to do what they're doing, which is running off basically a version of Android, which is run by Google. So definitely something to keep an eye on there. That we've already had our first big metaverse failure, in my opinion. So we'll see how that continues to develop. You did have a headline from Elon Musk, not Tesla related, but he said he's trying to use Starlink to provide internet access in Ukraine. I think it's a publicity stunt from him. He's known for this kind of shit, and Starlink is not active enough and that flexible enough yet to be able to do something like that. But who knows? Maybe he is able to do it. We'll see if anything does come of that. Again, it's not Tesla related, but Tesla doesn't necessarily move on Tesla news only, so just keep that in mind. So those are some of the interesting headlines out there. Now, some of the other stocks and earnings that we've got, obviously there are a couple plays that I'm going to be watching. So I'm obviously going to want to watch Lockheed Martin, Northrop Grumman, the same kind of defensive plays. Lockheed had that massive day on on Friday. We broke some descending highs here. How much more upside do we really have? That's the question. I'll be playing this shorter term in nature. I'll also have some second day plays from some other plays like commodity plays. Aluminum had a nice little pop here. Really been strong over the last month or so. See how that is. I really like this MDT. Medtronic had decent earnings, broke out of its descending trend line here, had a nice base at 100 and through the 50-day SMA, which it's been stuck below for several months now, finally through. So I want to see if we can get some follow through on that. I like the sector as well. I'll look for second day plays for some earnings plays, so like Block or Square, some of you may still call it. Had a nice little pop up here. It's been a stock that's been getting the shit kicked out of it. Maybe we get a little bit of short covering and a little brief rally. Pan W had a massive 2 days after their earnings. Look at these two bars that drove us up to the 52-week highs. While this one may not be able to continue, it may be a sector worth watching. kind of dragging the whole cybersecurity sector with it, Bug and all those guys. So it might be interesting sector to watch this week as well. Foot Locker got absolutely obliterated on their abysmal earnings and earnings guidance. We might get further downside, but they are at a pretty low level here near these COVID lows. So how much further down can we go is definitely the question on a stock that's already been getting crushed. CHK, another kind of breakout energy play after their good earnings. They also broke these descending highs. I want to see if I can get another day or two out of it on that one. And then some day trades, INDO, an energy play, small price energy play that's kind of low floating its way higher. And CARG, another day trade from earnings on Friday and a little explosion. Maybe we get a second day play on Monday. Unlikely though. Those are some of the interesting little kind of kooky plays that are cooking up. I am curious about the automotive sector because I'm seeing more and more headlines about with 5G starting to be released and really fully implemented, 3G is going to be sunsetted. And apparently, according to CNBC and several other people, there's going to be a serious impact on cars that don't get transitioned over from 3G. They're going to be losing a lot of services, and right now it could be affecting millions of cars, and it could affect things like automatic emergency response, navigation, home security systems, and all sorts of things. So I don't know if this is going to be a developing story. We'll have to keep an eye on that, but that is something to keep in mind as 5G continues to progress. Going into some of the earnings plays. So Monday morning, I'm just going to be watching one play that's going to be Berkshire Hathaway. They reported earnings over the weekend. From all intents and purposes, looks like it was a stellar set of earnings. I haven't dove too deep into the numbers yet, but it looks stellar. The stock itself holding up a lot better as well. So this might be a play I'll be watching. After Monday open on the close, you have a couple big plays like DDD, your 3D printing company, a Kathy Woods play, Zoom. Obviously, all of these getting crushed, which is why I'm still very bearish tilted on ARC. Sorry, Lucid Motors, which has been a good day trader from time to time, Ambarella, ACAD, BLNK, Groupon. We've got a lot of plays reporting earnings Monday after the close, and Novavax, one of our dissolving vaccine plays here. Tuesday morning, you get Baidu, you have Kron, you have Domino's Pizza. Kohl's for some of you retail traders, also Wendy's, which momoed not too long ago, Workhorse, there we go. Man, that's a $3 company now. Who would have? That's crazy. I love it. IQ. We're starting to get some China plays in here, some China earnings. Tuesday after the close, you have AMC, which is likely not going to provide anything. I hate to break it to you. First Solar, which could be interesting. It's been in a nice little downtrend for some time now. You also have Plug, Playboy, Nordstrom, SoFi, Urban, Rost. We're starting to get into the retail sector here of earnings if you haven't picked that up. Wednesday morning, you have Abercrombie & Fitch, Dollar Tree. Wednesday after the close, you have Snow, which is a big boy, definitely a big priced tech company. You have Victoria's Secret, which kind of moved recently. American Eagle. Thursday, you have Best Buy, BJ's, GoGo, Kroger, several other companies. And Thursday after the close, you have Gap, Smith & Wesson, Duolingo, Costco, Broadcom, and several other big companies. So I'll talk about these more during the morning market analyses that we do and during our podcast, but there's going to be a lot of opportunity today. Long story short, it's going to be an interesting week. We're going to have a lot of headlines. You can't predict the headlines, so just be careful if you try to play that game. And it's going to be a very lucrative week, hopefully, in terms of short-term trading. We'll see what we get. We'll see where we are by Monday, but I'll see you all tomorrow for the morning market analysis, and I'll see you throughout the week, Monday through Friday, 1 p.m. Eastern, for the morning market, the Vant Rant podcast. I'll see you then. Enjoy the rest of your weekend, and as always, safe trading.